Hello everyone. So in this video, we will be discussing about the cash flow statement. So under cash flow statement, we usually record all our cash inflows and cash outflows from our business during the year. So cash will flow in and flow out under three activities. Our first activity is operating activities through which cash will flow in and flow out from the business. Our second activity is investing activities. So same here, in investing activities also the cash will inflow and outflow through investing activities. And the final activity is financing activities. So we will go through by one each. Under the operating activities, we have cash receipts through which the cash will inflow in the business. For example, the cash will flow in when we provide our services and we sell our goods as to the customers. So when the customer pay to our business, then we will have a cash receipts. Secondly, we also invest in another company sometimes, through which we earn our dividends. When we receive the dividends from our investment, then it will also be required to record in operating activities. The third one is when we invest in some banks and we earn our interest. When we received interest, so that will be recording under cash receipts in operating activities. It means through these three activities, the cash will flow in the business in operating activities. Similarly, we also have some cash outflows in the operating activities, and the cash will flow out from the business, or you can say the cash payments in operating activities when we pay cash to our supplier for inventory which we have purchased. We will also have to cash will flow out from the business when we pay salaries to our employees, and we will also have to pay some other expenses such as electricity, telephone expenses. All these, when we pay to our for our expenses, then the cash will flow out from the business. And of course, we also pay interest to our banks. We also pay taxes to the government. So whatever the amount we pay, we have to record under the cash payments, and the cash will flow out from the operating activities in the cash flow statement. So for example, if under the operating activities we receive cash $1,000, and under the operating activities if we pay $1,100, it means we will have a net operating activities of negative $100. It means under the operating activities we will have $100 negative outflow. Our second activity in cash flow statement is investing activities. So under the investing activities, for example, if we sell any of our non-current assets such as truck, machinery, or any piece of land, if we sell during a year and we receive any amount by selling those non-current assets, it will be recorded under the investing activities in receipt side. Because when we sell our non-current assets, we will receive the payment. That's why it will be recorded positive in the cash flow statement. Similarly, we also purchase some non-current assets during a year. So when we purchase any non-current assets, then the cash will flow out from the business. So it will be recorded negative in the cash flow statement. Our last activity is financing activity. So under financing activity, when we apply for loan and we receive loan from the bank, then it will be recorded as cash receipts in the cash flow statement. Similarly, if we issue any shares in the market and we receive the payments against the shares, then it will also be recorded as the cash receipts in financing activities. And then we also pay our loan sometimes during a year. So if we pay any loan during a year, it will be recorded under the cash payments in the financing activities. And similarly, we also purchase back our shares during a year. So if we purchase any sort of share during a year, so it will also be recorded under the cash payments in the financing activities. So for example, under these three main activities, If our cash inflow is $3,000 and our cash outflow is $2,500, it means we will have a positive cash flow of $500 during a year. And for example, if we have a $3,000 cash inflow during a year from these three activities, but we have a cash outflow of $3,500, then in that case, we will have a negative cash flow of $500.